The A2 Milk Company for a long time was one of the best performing stocks in the entire New Zealand Stock Exchange, and in the past couple of years they have really stumbled. But just in the last week or two, they have reported their full financial year 2022 results, and it looks like they might be starting to show some real signs of a turnaround in the underlying A2 Milk business. In this video, I want to share some of my personal highlights from this latest update from A2 Milk, share some of management's 5 key takeaways for investors from their recent presentation, and I also want to cover what the future outlook for the A2 Milk business currently looks like. So if you enjoy the video, be sure to hit like and also subscribe to the channel if you are new here, but without further ado, let's get straight into the video. Now firstly, let's have a quick look at the historic earnings and revenue for the A2 Milk Company. If I jump over here to Simply Wall Street, that's going to allow us to easily visualize what the revenue and earnings and cash flows have done over the years. And you can see that A2 Milk was really rocketing upwards for a number of years in terms of their underlying business. And in 2020 and 2021, they ran into some pretty serious troubles. Basically what happened was, as soon as many of the A2 Milk customers went into lockdowns, you probably recall that there was a lot of panic buying and that sort of thing going on at supermarkets, and A2 Milk customers were really no exception. A2 specializes to a large extent in infant formula products, and of course that's kind of the last thing you want to really run out of if you're a mother of a newborn child. So there was a lot of pantry stocking that went on. A2 Milk thought that their business was basically booming and they were doing exceptionally well, and then all of a sudden the tap basically turned off. You know, people had pantries full of A2 Milk. They really didn't need to buy anymore for some time, and A2 Milk, thinking that they were having all these great sales, basically kept producing A2 products, was building up all this inventory which was then starting to expire, and it caused a lot of problems over the next year or so for the business. The A2 Milk Company trades at what looks like an optically expensive PE ratio of about 40 times earnings, but when you look at some of the context that Simply Wall Street provides, like its earnings growth expectations, it can help you understand why that high ratio might actually be justified for this business. So you can check out the A2 Milk Company report from Simply Wall Street. I'll leave that link down in the description below. Simply Wall Street is free to use and you can research up to 5 stocks every single month, but with the link in the description you can explore the platform limit free for 14 days and also get a 30% discount on the unlimited plan. So let's start off with the 5 key takeaways that A2 basically wanted investors and analysts to leave their latest earnings call kind of with these 5 key points in mind. And they are pretty major changes in kind of the underlying business. Firstly, around inventory. Basically, as I explained earlier, A2 had several issues with kind of managing their inventory. They actually ended up destroying quite a bit of product that was getting towards expiring or was expiring, and inventory is now at target levels, which is great to see. Apparently their product freshness is kind of near the best in the industry, and market pricing as a result has lifted up significantly. A2 aren't having to kind of sell their product at bargain basement prices and kind of damage the brand in that way, so market pricing has responded really positively to that inventory kind of rebalancing A2's gone through. A2 is also back to growth, so they grew revenue 19.8%, they grew EBITDA 59%, and they grew net profit after tax by 42.3%. So that return to growth was driven by rebalancing the inventory and also by investing in their brand and quite a bit of marketing spend, and as you can see in their latest numbers, they're now back to double-digit revenue and earnings growth. There's a positive outlook from the company and they're on track to continue towards some of their long-term growth targets. And interestingly, A2 Milk has announced what I think is their first ever kind of return of capital, which is a $150 million on-market buyback program. Now, just to give a little more detail on the revenue and earnings numbers that A2 reported, like I say, revenue was up 19.8%, They have also made an acquisition about that basically started getting reflected in A2's financial statements 11 months ago, which was the Mataro Valley Milk Company. So although revenue was up 19.8%, if you exclude the revenue from that acquisition, they still grew about 11.2%. EBITDA, like I said, was up 59%, and EBITDA margin was 13.6%. The Mataro Valley Milk acquisition does pull that margin down, so if you exclude that part of the business, margins came in at 16.1%. Net profit after tax up 42.3%, and net cash, A2 has a rock solid balance sheet. Net cash is now at $816.5 million, which is about 18% of the market cap as of recording this video. And it's also worth saying that A2 does have other investments that kind of add to the strength of that balance sheet. So they have a pretty substantial holding in Synlait. Synlait are the main supplier of milk products that go into the A2 infant formula and liquid milk and so on. So they have about $150 million of Synlait shares at current market prices, which is an additional about 3% or so of the market cap of A2. Diving into some of the individual segments, because A2 does have businesses in various parts of the world. The Chinese business is definitely the most significant one for them, and that was the business that really had a lot of highlights and a lot of good things to talk about in this latest earnings report. So to quickly walk through some of the revenue growth of each of the individual segments, China IMF, which just stands for infant milk formula, was up 12.2%. English label IMF up 11.6%, Australia and New Zealand liquid milk up 1.8%, US liquid milk up 30.2%, although it's worth noting that the US is a much smaller component of A2, so it's growing off a smaller base, and they said that that was driven by a couple of factors: growth in grocery and also growth through some of the innovations that A2 have been working on. The main one there, I suspect, is the collaboration they've done with Hershey's. So in the US, there is a Hershey's A2 milk, basically like a chocolate milk product. So up 30.2% in the US, and the Mataro Valley Milk business had $104.4 million of revenue for the 11 months that A2 have owned 75% of the business. In terms of outlook, I think A2 have been a lot more conservative here than they have been in the past. They've been stung historically around putting out pretty aggressive guidance and having to downgrade it over and over and over again, particularly when they were going through some of this inventory kind of rebalancing process. So the guidance they did give, though, was what they called high single-digit revenue growth. So it'll be interesting to see what that actually means when they report next. In terms of margins, they expect pretty similar gross margins to FY22, which is the financial year that they've just reported. A couple of drivers there. There are some increasing costs. So commodity prices, like milk, are very high right now, and they're basically able to pass a lot of those costs onto the end consumer. So even though the costs are up, the gross margin is going to remain pretty similar because they're increasing the cost of A2 products to the consumer at a pretty similar rate to what their kind of input costs are going up at. They expect a modest improvement in EBITDA margin, and the main driver for that not kind of going up more is really continued spend on marketing and trying to grow the health of the A2 Milk brand. Now, back in, I believe it was October 2021, the A2 Milk Company did actually put out some quite long-term growth targets, and luckily for us, they basically were benchmarking themselves against how they're performing relative to some of those long-term targets. So whether they are on track, whether they're behind schedule, they basically went through each of the different segments of the business and gave a bit of an update. Now, the goal for A2 was to try and get to 2 billion New Zealand dollars in sales by FY26, or at least in and around that financial year. And if you look at the kind of little traffic light summary that they give here, they are largely on track. There's a couple of kind of smaller segments of the business where there's some things that that need to be worked on. But overall, they are pretty well on track to getting to that growth target, and margins are heading in the right direction as well. Now, A2 actually give quite a bit of detail on their segment performance in their individual regions, so whether it's China or the US or Australia, New Zealand. If you want to check out every individual region, I will leave the A2 Milk Investor presentation down in the description below. For this one, I really just want to focus on China because that is both the biggest opportunity for A2 Milk's business in terms of long-term growth. It's also kind of the biggest threat to A2's business in a way because they can potentially become quite reliant on that one market segment. But there were a lot of good things to talk about in terms of the China market in this latest update. The revenue for the China IMF or infant formula business came in at 438 million. That is up from 390 million the year before and 338 million in FY22, which is kind of the year before that, 2 years ago now. So continued growth in China, which is great to see. Also continued growth in market share. So there is this sort of general macro overhang for A2 in China of a pretty steadily declining birth rate. So obviously less babies being born is not so good for an infant formula business, but A2 actually continues to grow even against that headwind because they're taking market share. So market share for what they call MBS, which is just mother and baby stores, went from 2.2% last year to 3% this year, and their digital online sales went from 2% to 2.5% market share. One of the things that really jumped off the page to me when I was going through the slide deck and latest results for A2 is actually that the A2 milk category more generally grew really fast in China in the last financial year, and A2 milk is no longer the only player in that segment. They do have competition, but the overall A2 milk protein or A1 free kind of category actually grew 108% in China in the last financial year. So A2 milk have lost some market share in the A2 milk category or the A1 protein free category, but they are still continuing to take overall infant formula market share, and they're continuing to grow. So that will be an interesting dynamic just to continue keeping an eye on. And finally, in terms of the brand health for A2, things are looking really positive. So in the last update that A2 gave, they said that they did expect revenue growth, but they said that earnings probably won't grow at as quick a rate as revenue does because they want to really reinvest in building the brand and getting that back to a healthier position considering all the inventory rebalancing and sort of issues that have gone on there, and pretty good signs in terms of brand health. So I will put up some stats here in terms of brand health and brand awareness for A2, and we're basically at kind of all-time highs really in China, and a lot of that has resulted in gains in many areas of the Chinese business and in terms of their sales. A lot of the advertising that they've done has been through avenues like WeChat, which is a Tencent asset. It's kind of like social media and a million other things that it's kind of used for in China. And that fed to greater sales on Tmall, which is an Alibaba platform, and also on JD.com, which is obviously a JD.com platform. So really good signs there. Now, the last bit that I want to talk about here from the A2 Milk FY22 update is this $150 million on-market share buyback that they have announced. Now, this is interesting for a few different reasons. Now, share buybacks are actually not really commonplace in New Zealand or Australia for that matter. They are very commonplace in other parts of the world like the US, but New Zealand and Australian companies tend to be heavier kind of dividend payers than share repurchases. And that's basically because we don't have the issue of double taxation on dividends like the US investors and US companies do. So when a US company makes money, the business pays corporate tax, and then if they pay money out as a dividend, the shareholder pays money on that dividend payment. And that's not the case. We have a dividend imputation credit system here in New Zealand that prevents that essentially happening. So that makes share buybacks a less common approach. But taxes aside, there are a couple of advantages to buybacks over dividends. They offer the flexibility to put a significant amount of capital to work when it's really advantageous to do so, when share prices are low. There's also not this ongoing expectation, like with dividends, that you will continue to pay money year in and year out. If the share price goes up and buybacks don't look that attractive anymore, you can turn the tap off and you can stop doing buybacks. Whereas if you start paying regular dividends, there becomes kind of an inbuilt expectation that you will be a regular dividend payer basically for the rest of time. So interesting to see A2 go down the buyback route, even given the New Zealand and Australian kind of context. And it looks like that buyback is the equivalent of about 3.2% of their shares outstanding as of recording this video. Overall, a really positive update for the A2 Milk Company. They seem to be kind of out the other side of some of the issues that they've had over the past year or two. They're now in a position where they're returning to growth, and in many of their key markets, particularly China, brand health is really, really strong. They are looking to do share repurchases at what a lot of people would argue is a reasonably attractive share price, but do your own work on that particular topic. And even after spending $150 million on buybacks, assuming that they kind of complete that full allocation, they're still going to have a really rock solid balance sheet. So that is it from me for this one, and that is my update on the A2 Milk Company. If you did enjoy it, be sure to hit like and also subscribe so that you can see future videos. And let me know your thoughts down in the comment section below on this latest update from A2. But that's it from me for this one, and I'll see you in the next video. Cheers.